All right, so many of us have the goal of making 5 figures per month options trading consistently. And if you want to do that, there are things you have to do and there's things that you have to avoid doing. So this video is all about that. And I'm just going to point out some of the mistakes that you're making and how to correct for them. Because I think you know that this channel is a lot about like, how do you become work optional? How do you make options trading surpass your 9 to 5 income or your business income or any other income that you make? And how can you make a significant primary income or an income that can replace your primary income now with options trading and just getting that financial freedom and that time freedom into your life? So I'm going to tell you from experience as to what made that a reality for me, what I had to accept and work with to get there, and then the mistakes that I see other people making and how they can correct for them. So number one is just that your account size is not large enough. Okay, so this seems very obvious to a lot of people. Like, well, I need like a certain account size in order to get 5 figures per month. Like, if you are at all a reasonable or rational person, you know that is the case. So this part of this video is a little bit about how, there are people that come in to have a meeting with me, and it is kind of rare, but it's still something that happens where they have a meeting with me and they're like, I have a 100K account and I may need to make 10K a month. And I'm like, well, you're not going to. Not consistently. You may here or there, but overall you're going to fail. And then you're going to feel like a failure because you're going to have to take on too much risk to do that. And it may work in the short term or for a couple months, but then there will be a reckoning. And when that reckoning comes, you'll then feel like a failure when you need not feel like a failure, because no one ever just told you to begin with, 100K portfolio isn't really enough to make consistently 5 figures a month. It's just not. So you want to be realistic because it's important, because if you're not, you'll make bad trades to try to meet an unrealistic goal. And you'll affect your capital. And anytime you're bringing down your capital over time, it's pushing you further away from your goal down the road in the future. Okay, so making 5 figures consistently off a 250K account size is a combination of 2 things. Okay, there's 3 things. There's 3 things here. Oh gosh. Okay, number 1, we have to learn more trades and become better traders. So if you're just trading the cash secured put and the covered call, you're not going to get there with a 250K account. Okay. And I also think with a 250 account size, the amount of return that I would see people getting that I think is reasonable to sort of like assume maybe you could get most months is somewhere in the like 7 to 8 to 9K range. Okay. Maybe even a little bit less if you're in very conservative stocks. Okay. Those 10K months or 15K months, they can come your way, but it's not going to be your norm even with the 250K account size, unless you learn more trades and become a better trader through learning more advanced trades. The other thing here that's going to make it possible for you to become a 5-figure per month trader is that you take that 250K account size, you grow it, you let your money compound, and then you grow the account size to the point where 5-figure returns become your new normal. Okay. So in other words, number 3 is you have to be patient. You have to be patient with this process. It will take some time. It doesn't take that long though, is the thing that you need to keep in mind. Like if you sit there and say, it's probably with my math going to take me 1.5 years to get there. 1.5 years is not that long. It's just not. Like a month is gone in a flash for me these days, especially when I'm just looking at the options calendar and knowing that my options expire every week. So every Friday is just like here and gone before I know it. Okay. One of the things you do not want to do to try to get to be a 5-figure trader with a 100K or 250K account is trade back stocks to get higher premiums, because that will end in tears, because there will be a reckoning that comes. There will be a market correction. There will be something that happens that encourages people to get out of those very risky stocks and move into the safe harbor of those safe stocks that we love to trade, that I'm a really big fan of. Okay, so do not go premium chasing to try to get to your 5-figure amount with a smaller account. Just don't do it. You'll regret it so much. It just won't be worth it in the long run. Okay. So number 2, the other reason that you're not being consistent and that you aren't a 5-figure per month trader is because your stock picks are bad. Okay. So if you want to make great money, you must trade great stocks, and there are no shortcuts here. So I'm going to say something to you. Hims and SoFi are not great stock picks. And why? Because they are newer companies. New is not consistent. You want consistency to get you into this 5-figure per month range. And new is not consistent. It can't be, because consistency comes with time. And they haven't had enough time yet to prove that they can be consistent. Do you see that? Okay. So if you want to make great money trading stocks, you have to trade great stocks. We need to trade companies that have proven themselves over decades with most of our portfolio value. Yes, decades. I said that right. Decades. Okay. And we trade monopolies. So we also want to trade stocks that have rising 5-year, 1-year, and 3-month charts, rising revenue and earnings for 4 years in a row. And this is the new one, guys. I'm going to make a whole new video about this as well. But you're going to be better off trading stocks that are in SPY. Now, most of those proven companies are already in SPY. They crossed that benchmark a long time ago, okay? Something like a SoFi is not in SPY yet, and that's a problem. I'm going to talk about that more in the future, but that stock will not have the same resiliency that stocks in SPY do, for a lot of reasons that once you know them, you're going to get it. You're going to understand why that is, okay? So if you want to make great money, you must trade good stocks. And if what you want from options is a consistent income stream, then you have to get real about it. Expecting consistency and profits to stem from a company that hasn't been able to do that for itself is delulu. It's a fantasy. That is a fantasy. So if you want to make 5 figures a month, you got to get real. You got to get real with yourself. And you got to say to yourself, can I peg my financial future and my income on a new company that hasn't proven itself and hasn't been around forever? Sure, it's growing really fast and it's impressive and I think it will do well. Okay. You can buy a few shares of that in your retirement fund and just see if you're right or not. Okay. But for the money that you need to live and that you're growing with right now, for God's sake, put that money in a good, solid company that's already showing you it knows how to make fantastic money now and knows how to get more customers and revenue and clients in the door now. Because that's what you need to become successful now. Okay. Number 3. The third thing that you're going to need to know is you are going to need to know how to do more than just sell options. So a problem is going to come along when you want to get to that 5-figure income is if you only know how to sell options. Selling options like cash secured puts and covered calls are considered and agreed upon by most options traders as being the safe way to make money. Okay? But safe has limitations. Okay? Safe has limitations. Learning how to buy options and profit from them can skyrocket your account, okay? And in order to skyrocket your account and not bomb your account, or like blow it up, as people say, to the downside, not the upside, is that you also need to know what proportion of your account you attribute to buying options and when to buy those options. And I'm really talking about buying LEAPS contracts here. So you need to be able to buy LEAPS contracts and you need to know when to buy them and when to sell them, when not to buy them and when not to sell them. Okay? So this is something that takes a lot of education. And so you have to get yourself an education around this. You just have to. You could also alternatively, got a hiccup there. You could grow your account to even larger. Okay. So if you got your account size to say sort of $600,000, selling options to make 5 figures a month, that could potentially work. But for me, I was too impatient. to make 5 figures and wait till I got to a 600K portfolio size. What I wanted to do was learn to trade more options so that I could make 5 figures faster and more, and like get there sooner so I could compound my account faster. And it was definitely worth all the time that I spent on the options education and figuring that out as a system. Okay, so when you know how to buy options, okay, you need to know when to buy and when not to buy. And these decisions will be based around seasonalities and earnings timeframes, most likely. That's generally what they will be based on. So, you know, like you got to know that stuff, okay? And if you don't know that stuff, you'll be amazed at how much, once you learn the seasonality and the earnings timeframes, how much better of a covered call or a cash secured put writer you will become, because you'll get even savvier at that. So your income will like go up on 2 different fronts. You'll become a better seller of options, and you'll become a better buyer of options. So this is completely worth it to figure this stuff out, okay? So you also have to learn how to buy options that have a small percentage of your overall account value in them. Because when a stock split or good news comes along, your life and your financial future will change overnight. I have had days where I have made $30,000 just going to sleep at night when they announced a stock split and I owned 5 leaps in a company, and then all of a sudden I was up $30,000 in the morning, okay? I've had it happen quite a few times. And now that it's happened quite a few times to me, you can like imagine for yourself, okay, let's say I've made $200,000 of those sorts of like holding leaps and having really great news like a stock split hit my account, hit the stock rather, and then it hits my account. And the compounding on the 200K that I make like 10 years from now is insane. It's insane. It changes your life. It's life changing, okay? So a lot of people would say that buying options is extremely risky. And I have come to the opposite conclusion. I have come to the conclusion that it's insane for me not to own a certain amount of leaps. Because when the good news comes in, it just affects me in such a positive way that I need to be a part of that. I want to be a part of that, okay? So once I figured out that having about 10% of my account value in leaps contracts can result in a 25% gain in my account size overnight, like when a stock split happens, or in the middle of the day when they announce something like that, the risk was that I didn't own any leaps. It wasn't that I did own leaps, okay? Like, you see how that works? So for those of you that aren't that familiar with what a stock split can do to a stock, is you announce a stock split and then all of a sudden the stock soars. It's just like instantaneous. Boom, up 10%, something like that. And going up 10% in a stock price, that's the initial reaction. Then the stock continues to go up into the split. It stops somewhere maybe a couple weeks before the split. But you're just like watching your account grow in this crazy awesome way. I mean, the other day I was not holding any AMD leaps at this for this announcement. There's an announcement that AMD was going to like basically billing billions right now. And so they see all these billion-dollar contracts coming in, and AMD went up like 8.5% overnight. Do you know what that does if you own like 4 or 5 leaps contracts in AMD? It's bonkers, guys. It's bonkers money, okay? So you have to be really specific and really calculated about when you buy those leaps, when you sell those leaps, and what the time durations are on them. There are rules that apply to that, okay? So number 4 is going to be about how do you become this 5-figure trader? Or why aren't you there already? You're not there already because you don't know how to manage the leaps that you own. Okay, so after you buy the leaps and potentially they go down in value, this is where people freak out. And you can do one of 3 things, in my opinion. Number 1 is you can freak out and maybe sell them for a loss. Big mistake, usually. Number 2, you can wait for them to rebound with market retracement or stock retracement, and then you can sell them for a profit. Okay. Or number three, you can, again, know some more advanced options theory and make them into diagonal spreads to collect more premium income. And what you're doing here is you are just basically collecting like a very similar amount to how much money you're making on covered calls, but with way less equity and cash in the market to do so, which is, this is a hack. If I don't know, like this is one of wealth's greatest hacks is the diagonal spread. It just is. It's just phenomenal. So like if you're telling me right now, oh, I don't really want to buy a Leap because if the stock goes down, my portfolio is going to get smaller and I'm going to lose money. You don't have to lose money. That's a choice. You could turn it into a diagonal spread. The only reason that you're losing money is because you've chosen not to educate yourself on how a diagonal spread could bring you in more money in this situation. So I don't know, guys. Like, I sort of see a lot of this stuff in the comments, but like, oh, but buying Leaps is so risky. Is it? How? Tell me how it's risky. Because you don't know how to trade diagonals? Well, you could just come to me and I could show you. Why don't you just do that? Problem solved. All right. So if you don't know how to manage Leaps, it's because of you're wondering like what's stopping you from being able to manage Leaps. It's because of one of these 6 things. Number 1 is you freaked out and you sold for a loss. That's why you lost money on a Leap. Number 2, you weren't patient enough to wait for a rebound. Okay. Options trading in this way is a game of patience. It's a game of like today there's this big sell-off in the market and it's in November and it's at a seasonally weird time. And so I just go like, I'm not even really going to log in to my account today. Like, what is the point? I looked at it in the morning. I did some trades and I was like, this kind of sucks. So I'm going to go do something else. So I went to the wine store and I got some wine. That's literally what I did. Not to drown my sorrows, just to be like, hey, we kind of need to restock. It's coming up on the holidays. And I knew I'd have a fun time doing that. So that's what I did. Okay, number 3, you're not making money on Leaps contracts because you never learned how to run diagonal spreads. Or you learn them in the wrong way. Because there's a lot of ways to run diagonal spreads. The poor man's covered call isn't the only way to do it. And guess what? Your calls don't need to be in or out of the money. They can be either or to manage them with diagonal spreads. That blows people's minds when I say that sometimes. Another reason that you're not making money with Leaps contracts is because you chose a bad stock. You're stubborn. You think that like you're going to be the next like discoverer of the next greatest thing. That you're smarter than everybody else. You're smarter than the people who tell you go with the best companies. And you just didn't want to follow that because maybe that Leaps contract was expensive. And you're like, this is expensive. I'd rather get a cheap Leap. Cheap Leap probably is going to lose you money. Okay. Number 5, you bought at the wrong time with seasonality in mind and with the earnings cycle in mind. Or you just didn't even realize that these things should affect your decision making. Okay. And number 6 is one of my favorites. You should have chosen a longer expiration date. Okay. So a lot of people are like, okay, I'm buying Leaps and it's 365 days because that's a year. So that's the one I'm going to buy. And that's what comes into their mind is like, I'm going to buy a year. So a year should be good. I prefer 500 days. I really do. Because there are times when stocks that are the best stocks on the market get stuck in a range for a year. And that's very normal because most stocks go through a period of rapid growth for 4 to 5 years, maybe 6, and then they stall out and consolidate for about a year. And you guys, if you want to look up any stocks that did this pattern, look at Nvidia after the stock split. It did that. Look at Amazon until a month ago. This video is November 13th, 2025. Okay. These stocks are both in consolidation patterns. They didn't go anywhere for a year. I own Leaps in these companies. It was annoying, except for the fact that I knew how to run diagonal spreads. So I was still able to make money on them, and I still sold my Leaps for a profit. So it was a beautiful system, okay? You can't get me down. All right, okay. So if you're not making money on Leaps contracts, it's because of one of those 6 things. And how do you correct for this? You learn patience. So I don't know, maybe you need some life coaching around patience, or maybe you can just train yourself to be patient somehow. You need to get great stock picks, okay? I love my metrics for stock picks. Those are what I use. This hardly ever gets me in trouble using my metrics. If you want to see my metrics, go to my video series on investing for financial freedom, and you'll see how I pick my stocks. And then the last thing is that you need to start studying options theory more and seasonality and earnings patterns. Okay? Each stock has an earnings pattern. Some of them don't, but most of them do. But there are definitely times that you need to stay away from buying leaps with relation to earnings. And if you don't know what I'm talking about, you need to learn it. Okay? Number 5, the reason that you are not making 5 figures options trading is because you quit when the market goes red. Okay? I hear from some of you guys, and you are absolutely terrified of the market going red. And this is a mindset issue. It's not a real thing. What you are afraid of is not real. It's imaginary. You think that the market going red will prevent you from making money in the market. And that is wrong. That is incorrect. You can still make money when the market goes down. Your portfolio may not be as high, but I wonder why that matters so much to you. Like, you got to grow up a little bit, okay? So here's what I want to show you right now. Look at this. This is SPY from 2006 to 2026. So it is SPY for 20 years. Where did you guys learn that the market is going to go down? I can't figure it out. So it went down in 2008, and then it retraced in basically to 2012. So for 4 years it was down. That sucks, right? But at all this time, if you were options trading and you were doing bear call spreads, you could make a lot of money in here. Your portfolio may have still been down, but if you took your money that you were getting from your bear call spreads in 2008 into 2012 and you reinvested it in shares in quality companies, when the market took off and went back to the upside, your portfolio would have grown. It just would have. If you would have bought puts in here, you would have done well. If you'd have tried the same old strategies, you wouldn't have done well. You wouldn't have. You're going to have to learn some new stuff if the market goes against where you want it to go. The problem isn't that the market went down, and so it wasn't possible to make money. What ended up happening was that the market went down, and you refused to learn how to trade the right direction for that. That's what happened. So let's just get real about what's happening, okay? Because stopping trading is probably like the worst decision you can make because you don't learn anything. And when you don't learn anything, you become very stagnant. And also you just like kind of dig in your stubbornness, and you create a reality in your head that's very negative. And I don't know why you'd want to do that to yourself. But anyway, look at this market. If you had invested, I just think too, oh my gosh, if I had money to buy shares in Apple, right, in 2009, and then the market there is at like SPY is at 120, and now it's 681. Come on, guys, like I've for sure 6 times my money in 15 years. Is that bad? That's not bad. So it's delusional that you look at this and go like you're always thinking about red days, because we've got a period of 4 red years in here, kinda. But if you had started investing in 2029 or 2010 or 2011, you were happy. The only time you were a little bit upset is if you'd been investing previous to that. We look at the, some people talk about this COVID crash being super horrific for them. How is it super horrific for you guys? It only lasted like 6 months. Like, that's not a long time. 2022, I traded that. I'm so freaking grateful I traded that. I learned more then than in any years I made a lot of money. So much better. It did so much better. And then we had this sell-off in April this year. And people will talk about how that really hurt them. I'm like, you're still hurting from that? Are you? Or just like, is it over, but it made you panic? And why did you panic? I still can't figure out why people panicked. I think it's just like a shock and they're not over it, which is weird because most of the time they're doing well, but they're being defined by a bad spot here or there. I don't know that it makes any sense to me. So a red market or a bear market is an opportunity for you to master trading. You can master the bear call spread then. You can use diagonal spreads that I mentor to print cash or premium. Like you can. It's one of the things that I do. I turn my leaps into diagonal spreads and I still make money off of them. And I also want to remind you that your covered calls can still generate money in any market. Might you make less money in a bear market? Yes. But would you make more money than like having your money just sitting in a mutual fund? Yes, you would. Your mutual fund is just going to be sitting there. It's just going to be sitting there, going down and staying down. And then if you own Amazon shares, can't you collect something like $40 in premium a month? Even if that's shitty money. You can. You can. So which is more powerful for you financially? Okay? Maybe you're taking $100. Maybe you used to make $400 a month selling Amazon covered calls on your Lotto 100 shares, and now you're only going to make $100. Okay. Still better than having your money in a mutual fund. I don't see how it's not. Okay. So some of you aren't okay with making less money in a bear market. And guess what? You're going to make less money in a bear market. And if that makes you uncomfortable, then options trading isn't for you. Then you shouldn't be doing it because you're literally setting yourself up to be upset sometimes. And why would you want to make yourself upset? So if this sort of thing is going to upset you, this is not for you. I just feel like it's not. It's up to you eventually to make that decision. But if you can't reconcile the fact that for 5 years in a row, you're making fantastically great money, or maybe 10 years in a row, you're making great money, and then 1 year or 2 years, you make less than the year before, you should go find another line of work that can guarantee you that. And good luck, because it doesn't exist, does it? No. If you are, I'm a business owner. I've always been a business owner. I've had 5 years in a row of great business and then one crappy one. Happens all the time. Happens all the time. You know, if you can have great years farming, if you're a farmer, and then just have a drought 1 year. And then you have a bad year that year. So why do you guys think as traders that you're somehow going to be immune from ever having a bad time? That is not realistic. Okay? So the market going red for you is a blessing, and you need to start embracing it as such, because it's going to treat you, it's going to show you how to trade that market and what you're capable of in that market. In fact, I look up for the next bear market because I go, okay, I traded 2022 and I made 30% less income in 2022. Okay. And so when the next one comes along, I'm just wondering if I can beat 30% less. I'm like, could I get that up to 20? Because I think I'm a better trader now. So I'm curious to find that out. Okay. All right. So red market is a blessing. And how? Well, if you want to become work optional from trading, you don't need to know don't you need to know what you're going to make in a bad year to plan for your future? A bad year is going to tell you how much you need to make when your feet are held to the fire, or how much you can make when your feet are held to the fire. So how are you going to know if you usually make $17K per month options trading in a bullish market? Okay. How are you going to know what you're capable of when a bear market comes along? You won't really know until it happens, right? And then you're going to need some time to be good at it. And this is the crazy thing is about bear markets is they don't actually last that long. So you're not going to get that much practice, usually. I think the most practice anybody probably had that's of my age group is probably in that 2008 thing. And that was called the Great Recession. So it was almost as bad as a depression. And when things are as bad as a depression, are you going to be worrying about what's happening in your brokerage account? Or are you going to be worrying about how the whole world is really suffering? And you don't actually have it that bad because you actually have a brokerage account. There's a lot of people who don't. So I'm just trying to put this stuff in perspective, guys, for you. Okay. So a bad year is going to tell you how much you make when your feet are held to the fire and the market is bearish. And it's going to show you what account size you really need to succeed in both good times and bad times. It's going to make you a better planner. Okay. You might realize that your plan to become work optional or to retire from options trading is actually 2 years out later in your life schedule that you had tried to design for yourself than you originally thought, because you need more time to grow that account and make the account compound more. So where you thought before, hey, maybe I need $1 million account to make let's say 30K a month, okay? In a bull market, it's very easy to do that. But in a bear market, you're hitting 20 a month. And then you're saying to yourself, gosh, where am I going to get that 10K from? Well, you're not ready to make this move then. You've got to figure out some way to get that account size up so that, in my opinion, that when the bear market strikes, it doesn't affect you. And that's what I've done with my planning for this, is that I went through the bear market, and I knew that I figured out from that experience that I make 30% less. So what I did was I was like, well, I'm not going to really be work optional, or I'm not going to have any other source of income. I can choose not to have any other source of income in my life when my account size gets to the point where making 30% less doesn't impact me at all. Because I don't want that stress. I don't want the stress of like having to trade to pay my bills. I want trading to remain a joy in my life and something that I very much enjoy. And I don't want it to be this pressure, and I don't want to have to make bad trades to try to pay the bills that month. Because to me, that's not financial freedom. That's still some sort of imprisonment, and I don't want to be a part of that. Okay? So, you guys, we're kind of going to do like a full circle now, back to the beginning of the video. And I'm going to take you back to the original problem that most people have, which is that to make 5 figures per month off, your account size has to be large enough to generate that level of income without taking on too much risk on your capital. Okay? So your account might have to be bigger than you originally thought to account for a bear market. There are so many people that get on the phone with me and they're like, well, what do you do during a bear market? I'm like, I trade. Well, what do you do? And like a lot of people say they just quit. And I'm like, you can't quit. You have to keep going because you have to figure out like how you can do this. Okay. But you also need the experience so that, can you imagine trading your first bear market when you have no other income? It sounds awful. It sounds like a terribly stressful thing. And I just don't like that kind of stress level for me or anybody that I know. So your account size needs to be large, probably larger than you think it needs to be. So I just want everyone to be like super realistic about this, okay? Now, the thing that people think about why your account size needs to be large is not exactly the reason that you think it needs to be large, okay? I'm going to throw another loop at you here and take you back to the beginning again. People think it's easier to make a lot of money on options if you have a lot of money. And that is true. But most people don't realize why it's true. It's not because it's easier to trade with more money. If you trade with bad habits, you won't make more because you have more money. You'll lose more money because you had more money. You'll still lose it. It just will take you longer to lose it. And it'll be more painful. So like, and you'll have lost more. So that really sucks, okay? And it irks me when people in the comments on my videos say, oh, it's so easy for you to make a lot of money because you have a lot of money. And I'm like, no, guys, it's easy for me to make a lot of money because I know my stuff. Come on now. Come on. You can only make a lot of money in the stock market if you know what you're doing. It's not because you have a lot of money to begin with. Like, that doesn't even make sense. How does that make sense to you? The real reason it is easier to make a lot of money consistently when you have a large account is because you can afford the best stocks. And the best stocks are expensive. And the reason that you can afford them is because you have a lot of money. In a bear market and in the recovery from a bear market, there are stocks that will be good to trade and there are stocks that will be bad to trade. And the stocks that will do well are the expensive stocks that pay a dividend. Okay? If the stock market goes south, the institutions are addicted to trading stocks that pay a dividend. Because if for nothing else they get from holding those shares, they get the dividend. And when you are millions, tens of millions deep invested into a stock, those dividend payments are huge. So they will stay in stocks just to get the dividend. They will dump stocks that do not pay a dividend. They will. Stocks that don't pay a dividend will dump harder and faster and will retrace last when the market rebounds. So the reason you need a large account size is to weather the storm of these sell-offs, because the best stocks are expensive and the best stocks are the most reliable. They are the last stocks to get dumped and the first stocks to get pumped. It's a fact. You could just look it up. You could just do some research on your own and see if this is true or not, okay? All right. So, realizing your goal of becoming a 5-figure per month trader is as simple as getting good trading habits, and you need to start how you mean to continue. So I often have people who will come into the group and they'll say, hey, I'm just gonna trade SoFi until I can afford a better stock because I just want to get my feet wet on that. I'm like, yeah, but you're setting yourself up to trade a stock that's probably more likely to fail than one that's likely to make you succeed. So you're setting yourself up for a self-fulfilling prophecy for this not to work, and you're not taking the core teaching first, the most fundamental thing, seriously. And, I have to correct people a lot on that and just be like, I can't tell you what to trade because it's not my job and I'm not qualified to do that. But I'm just saying, if you're going to start out, guys, out there, and you're going to try options and learn how to trade options on a shitty stock, you're going to have bad results. And then you're going to think options trading doesn't work, which it's not. That's not why. Options trading doesn't work on bad stocks. That's a fact, okay? Number 2, you need to learn options theory and advanced options strategies. Okay, it's going to be hard to make 5 figures a month consistently if you only know how to sell options. Okay, number 3, you need to learn how to identify the best stocks to trade and get used to buying expensive things. Just get used to it. I have a theory that a lot of people are very interested in cheap stocks because they come, they're used to buying things on sale, or they think that's a good bargain or something like that. And there's no bargains on the stock market, really. There just aren't. The most expensive stocks are valuable because they back a quality product, and quality products are expensive and they don't go on sale. I'm so annoyed at things that don't go on sale that I want. I want a coat from Max Mara. It will never go on sale. It just won't. So I'm gonna have to pay full price for it if I want it. And I think I'm too stingy and I'm not gonna do it. Okay, and number 4, be patient, because that account needs to grow for you to get there. Okay, so your account size needs to grow for you to get to the 5-figure a month place. And I know that sucks hearing that, but if you're not there and you know advanced options theory and your results are good, you're just at the point where you just need to keep growing that account. But guys, another thing that you all will say about me is it's so easy for you to make money being that you have all this money. And I'm like, yeah, sure, but I didn't start there. I earned all that money from trading, and it did it in a really short period of time. I did it over 7 years. I don't think that's very long. I just don't. I mean, maybe some of you people think that's a really long time, but again, I would ask reality to bite you in the butt and get some sense knocked into you, because that's not that long. Okay, so this is a marathon. It's not a sprint, but the time will fly by. The time will fly by because you will see your account grow, and I think you guys will have a ball doing this as well. So if you want to learn more about options trading or any of these things on how to get to this 5-figure a month income, I have a mentorship program you guys can join if you'd like. You can just click the button down in the description to book a meeting, and we will talk more about it there.